Ladies and gentlemen, good day and welcome to WAAREE Energies Limited Q4 and FY25 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star, then zero on your touchtone phone. I now hand the conference over to Ms. Pooja Swami from MUFG Time India Private Limited. Thank you and over to you, ma'am.
Thank you, Steve. Good morning, everyone, and welcome to the Q4 and FY25 earnings call of WAAREE Energies Limited. From the management, today we have with us Mr. Amit Paithankar, Whole-Time Director and CEO, Ms. Sonal Srivastava, Chief Financial Officer, Mr. Abhishek Parikh, Group Head Finance, and Mr. Rohit Wade, General Manager, Investor Relations. Before we proceed with this call, I would like to give a small disclaimer that this conference call may contain a certain forward-looking statements which are based on beliefs, opinions, and expectations of the company as of date. A detailed disclaimer has also been given on the company's investor presentation, which has been uploaded on the stock exchanges. I hope everyone had a chance to go through the results. Now I would like to hand over the call to Mr. Amit Paithankar for his opening remarks. Over to you, sir.
Thank you very much, Pooja. Good morning, ladies and gentlemen. Thank you for giving us your valuable time and joining the Q4 earnings call of WAAREE Energies Limited. I will be referring to the presentation that has been uploaded on the NSE and BSE websites. If you have the presentation handy, it will be helpful to follow along. We move to slide 4. 2025 has been a landmark year for WAAREE. It was a year of exceptional performance, major milestones, and solid execution across the board. The entire team at WAAREE worked tirelessly to deliver what we believe has been one of our most outstanding years yet. Our revenues for FY25 reached 14,846 crores with an EBITDA of 3,123 crores. Our order book remains robust at 47,000 crores, and as of March 31, we had 15,550 crores of funds available for capital deployment, a testament to our strong financial health. Our module manufacturing capacity now stands at 15 gigawatts, making us the largest in the country. Our 5.4 gigawatt cell factory was inaugurated during the year, also the largest of its kind in India. In the US, we operationalized 1.6 gigawatts manufacturing facility. Indosolar, which WAAREE acquired, had its first year of operations in 2025 and posted a profit of 55 crores. We thank all of our investors for their enthusiastic participation in our IPO and for the confidence you have placed in us. We have continued to receive industry recognition, ranked as Tier 1 PV module supplier by BNEF for the 30th consecutive quarter. Sustainability remains core to our strategy. We won EcoVadis Gold Medal, placing us in the top 3% of companies globally. CARE upgraded our rating from A+ for long-term and A1+ for short-term, further validating our performance. Looking at the broader picture on slide 5, you will see our strategy of backward and forward integration aimed at becoming a comprehensive energy transition partner. On the backward integration, we have already achieved 15 gigawatts of module manufacturing capacity and are targeting additional 4.8 gigawatts by FY27. Our 6 gigawatt integrated wafer, cell, and module factory remains on track for 27. R&D collaborations such as IIT Bombay aim to commercialize perovskite tandem cell technology. Our 3.5 gigawatt battery storage facility and 300 megawatt green hydrogen electrolyzer plant are also scheduled to be operational by 2027. On the forward integration side, we are actively expanding into power infrastructure with one acquisition already in progress and 170 megawatts in development. Our EPC business is growing with 3.2 gigawatts under execution. A 3 gigawatt inverter facility is on track to be online late FY26. Our position, therefore, in the industry is very solid on chart number 6. 14.1% share of India's module manufacturing and over 400 channel partners across the country. We are able to reach to every nook and corner of our vast country. A pipeline exceeding 100 gigawatts, and all of this has tailwinds of regulatory policies of Make in India, PM Surya Ghar Yojana, PM Kusum, and several other benefits like PLI. Slide 7. Sustainability for us is non-negotiable, and we continue to demonstrate our commitment towards the environment. We are committed to net zero emissions, Scope 1 and Scope 2 by 2030, and Scope 3 by 2040 through science-based targets, and our initiatives are aligned to the United Nations Sustainable Development Goals. We are the only Indian company in our category with an EcoVadis gold medal. Our 600 watt peak and 550 watt peak modules have environmental product declarations from cradle to grave, the first Indian company with this certification. Our aim is to have the lowest carbon footprint in the industry. Slide number 8. Bankability in this industry matters. Our modules are consistently ranked highly by PV Tech, RETC, and Kiva. We have achieved a bankability rating of A, the first for an Indian company to do so. Ladies and gentlemen, I will now hand it over to Sonal Srivastava, our CFO.
Thank you, Amit. Good morning to everyone, and welcome to our Q4 earnings call. I'm pleased to present the outstanding results of our company for this quarter. Starting with our consolidated performance for the full year, we have reported a revenue of 14,846.06 crores for the year, which is reflecting a robust year-on-year growth of 27% plus. EBITDA for the year stood at rupees 3,123 crores, representing a strong increase of 72.59% year-on-year with margins of 21.04%. Last year, the same margin was at 15.56%. PAT for the year stood at 1,928 crores compared to 1,275 crores last year, an impressive growth of 51.29%. Now coming to the Q4 results, the revenue for the quarter was recorded at 4,140.92 crores, up by 37.7%. That's on year-on-year basis. EBITDA for the quarter stood at an impressive 1,059.57 crores, a rise of 116% compared to last year, excluding the other income. Margins for the quarter was at 25.59%, which expanded by about 900 basis point plus. Profit after tax stood at 644.47 compared to rupees 475 crores in last year. Thank you. Now I hand it back to Amit.
Thank you very much, Sonal. Thank you for taking us through those strong financials. I want to take a moment to reflect on what all of this means. FY25 has been an exceptional year for WAAREE. Record revenues, strong profitability, expanded capacity, and strategic global execution. It is on the back of this solid performance that we now offer confident guidance for FY26. We are projecting an EBITDA range of 5,500 crores to 6,000 crores, a substantial growth from FY25. This confidence is grounded in the scale of our order book, our integrated value chain, and our proven execution engine. On the slide 14, I would like to close with a few key takeaways. We had a robust FY25 and are well positioned for FY26. Our leadership in technology, sustainability, and manufacturing is clear and shall continue to hold us in good stead going forward. We continue to deepen investments across the value chain: cells, ingots, wafers, green hydrogen, batteries, and power infrastructure. Strategic collaborations and institutional partnerships, including with IIT Bombay, are unlocking new opportunities in R&D and innovation. FY26 is going to be about consolidation and acceleration. Our performance gives us the platform. Our strategy gives us the direction, and our execution will deliver the results. Ladies and gentlemen, thank you very much for a patient listening. I will now hand it over to Pooja to coordinate the question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yes, good morning, sir, and congratulations on a very good quarter and a fiscal. So my first question is on the DCR, right? Have you started building the DCR order book given that our sale capacity is up and running? Is it possible to give us some sense of it if you don't want to quantify?
Yeah, sure. Thank you very much for the question. A very pertinent question. DCR is an extremely important strategy, and like you rightly said, 5.4 gigawatts of cell manufacturing has commenced in our factory in Chikli. So the DCR order book is getting built and fast and furious. One of the segments which is going to be a primary off-taker for that is going to be the retail segment. And that is a more book and ship kind of a segment where you book the order and in a fairly short period of time you ship it. And so that overall order book is looking very strong and actually is building up in a very fast manner.
Mm-hmm. Is it possible to quantify that number, say, in gigawatt terms?
Directionally, what I would say is, we will quickly go up to over 1.5 gigawatts of requirement from the market. That's what we are anticipating at this point in time.
Understood, sir. My second question is, given that the recent uncertainty from the new U.S. administration and recent tariff announcement, right, what kind of risk you envisage, especially on the overseas order book, in terms of execution or postponement of the orders in F26 and F27?
So the good part for us in our business, as I was talking about in my opening commentary, is we have a 47,000 crore of order book. And that's a fairly certain and a stable order book for which we already have received advances for most of the line items. And we are in the process of delivering that order book, which is why our certainty, for the EBITDA numbers are. So from that perspective, I would not say nobody can be completely insulated in the way in which things are moving around. But for the present year, for 2026, we are fairly confident of achieving our EBITDA guidance number that we have given, which is 5,500 to 6,000 crores.
Understood, sir. Thank you. That's it for sir. Thank you. And best of luck, sir. Thank you.
Thank you very much.
The next question is from the line of Sunny Gosar from MK Ventures. Please go ahead. Hello, Mr. Sunny, your line has been unmuted. Please go ahead with your question.
Hi, sir. Thank you so much for taking the question. Sir, on the FY26 guidance, if you can, because we are moving from a manufacturing-led business to manufacturing plus like an IPP, if you can roughly give the breakup between what will come from our manufacturing, whether it's cells and modules and batteries, etc., which will come in the future, and from the IPP business. Thank you.
So the primary business for 2026 will continue to be our manufacturing business, the core business, solar business. As you would have seen from our presentation as well as the comments that I gave right at the beginning, most of those, whether it's batteries or whether it's green hydrogen, these facilities will be up and running in our expectation in 2027. So 2026 is going to be a very similar set of businesses that we already have that is going to deliver the numbers.
And sir, our IPP business in 26, the NL acquisition?
Yes, so NL acquisition at this point in time is in progress. So the numbers that we have given consider a very small portion of potential power infrastructure business, as we call it. But it's largely solar business. It's largely solar manufacturing business and the EPC business through our subsidiary WAAREE Renewable Technologies Limited, which is considered in this set of numbers.
Thank you. I'll join the queue again.
Thank you. The next question is from the line of Karthik Sharma from Anand Rathi Institutional Equities. Please go ahead.
Hi, I hope I'm audible, and thank you for taking my question. Congratulations on the great set of numbers. I just had two questions. One is on the order book breakup, and what kind of capacity utilizations are we looking at now and going forward? If you could throw some light on that.
Sure. So our order book at this point in time is roughly split about 47% from India or 45% from India and the rest overseas. So that's the number at this point in time. And from a CUF perspective, we have been constant, and that's how, if you see the revenue uplift that we have, a lot of it has actually come out of sweating the assets better. And every passing month, we keep getting better and better. We have a bit of a spread depending on the type of lines that we have, and several factories that we have. The CUF is actually ranging anywhere from 60% to, in some cases, even touching 90%. So it's a mixed bag, but over a period of time, our endeavor will be to continue to keep pushing the CUF up, and which is also a significant portion of the EBITDA component that we are talking about.
Got it, sir. Thank you. Just a follow-up question on the order book. Is this order book just for the modules, or does this also contain the EPC portion, or WAAREE Renewable RTL post that separately?
It is a consolidated order book that we are talking about, which includes WAAREE Renewable Technologies Limited.
The 3.2 gigawatt order book of WAAREE RTL is also included in this.
You are absolutely right, Karthik.
Okay, thank you, sir.
Thank you very much.
The next question is from the line of Subramaniam Yadav from SBI Life Insurance. Please go ahead.
Hi, good morning. Just wanted to understand this guidance of this 5,500 to 6,000 crore. Does it also include other income in that?
So the guidance that we have given, Mr. Subramaniam, is guidance that the EBITDA that is going to get generated out of our operations, and really not any. I mean, there is no other exceptional other income or anything of that sort included in that. This is pure play income that is going to come out of operations.
Okay. Understood, sir. But if you can throw some light on what kind of production estimate you have taken for this EBITDA, maybe 10 gigawatt or 11 gigawatt, that would be really helpful.
So phenomenal question. The way we are going to configure or steer our business, Mr. Subramaniam, is our key control variable is going to be EBITDA. And that's going to drive how we are going to manufacture, the number of megawatts or gigawatts we are going to manufacture, and that just simplifies the way in which we internally run the business as well. The goals that all of us have, it kind of simplifies the whole deal. So that's the reason why we are going to concentrate on EBITDA and not as much on the other parameters. Now, having said that, our EBITDA in 2025 was 3,123 crores, and we are gunning for 5,500 to 6,000 crores. And so one would say, is there a linear relationship between megawatts on the top? The answer to that is not necessarily. It really depends on many other factors, and that's the reason why our concentration point is on EBITDA.
Okay. So do you expect your realization also to improve from here on? Because currently, when we look at your quarterly numbers, we were sitting somewhere around 21 cents on the module side. So how do you see this developing over next year?
Yeah, hi. Thanks for the question. This is Sonal here. See, I think the number to look at is the gross margin management, and that's what we have been focusing throughout in WAAREE. So if you look at the pricing on solar over the years, the trend is coming down, and rightly so, because of technology changes, and therefore the input price also changes, the main input ingredients. And that's what we manage here in WAAREE. So as the prices are coming down, you will see our raw material prices are coming down faster. And therefore, we are able to manage a good margin. And that's something that we hope to do as we continue into the future. The strategy to do this is, you can see our order book. So the moment we have an order, we try to see what kind of raw materials can be secured against that order. So we kind of have a lock-in on the margin. Of course, we try to do that as much as possible. And that's what is a continuous effort in WAAREE. So you will see over the last, all the quarters this year, the gross margin improvement has happened.
Yeah, that is what I was coming to, because our margin has been improving, but our realization is stable. So just maybe this part also, if I'm looking at...
Yes, that's correct. So if you look at the major, if you see the breakup, the raw material cost itself, even from last quarter. So if you see the last quarter, we came in something like around 68%, and this quarter we are something around 65%. And on a total COGS basis, if you see the margin has gone up, of course, like from 29.3 to about 32%. So this remains our key focus area, which is the raw material, and also manufacturing expense. Internally, we continue to manage that for efficiencies, etc.
Okay. And if you
to top it, our mix, in our mix, the locally made cells within WAAREE is also increasing, and that also helps in the overall margin uplift. So there are many reasons why there are margin uplift. So that's the reason why, Mr. Subramaniam, we are going to have the key control parameter as EBITDA. And when you do that, you manage the business around that.
Understood, sir. But when we source locally, sir, the price of the cell will be a bit higher than what we get from Southeast Asian countries or China, maybe?
So basically, we are keeping our supply chains flexible, and we keep changing depending upon the customer requirement, depending on the country that we are sourcing. As far as India is concerned, I think what Amit rightly pointed out was this year we are going to get a good fillip because of our own cells, which is going to ramp up this year, which was not there last year. And obviously, this cell is going to be focused in the DCR market, which will help us expand the DCR in our portfolio mix compared to last year, as well as help us source cells which are, externally we are sourcing them at a higher price. And this year, of course, with our own cells, that differential will also play out.
Understood. And finally, ma'am, if you can
I'm
give
sorry to
me
interrupt,
the...
Mr. Subramanian. Please come back in the queue for further questions. Ladies and gentlemen, in order to ensure the management is able to answer questions from all participants, please limit your questions to two per participant, as there are several participants waiting for their turn. The next question is from the line of Sarang Joglekar from Vimana Capital. Please go ahead.
Yeah, thanks. So just wanted to get some understanding on the DCR market. How is that shaping up? What's the annual demand for DCR modules? Secondly, as now you already have 5.4 gigawatt, do you see further margin expansion because of that?
See, I will talk about one major segment in the DCR market, which is the PM Surya Ghar Yojana. But of course, it includes Kusum also. The way this market is playing out, last year it was something like around 3 to 4 gigawatts. And based on the allocation increase by the government and their own government's spend structure, we expect this market itself to go up to anywhere between 10 to 15 gigawatts this year. So that's the potential that we have on the DCR market.
And Mr. Sarang, just to add on to what Sonal said, a good portion of this will also find its way to the US. As importation into the US will find more and more restrictions. Indian cells are actually going to be better positioned tariff-wise, potentially, to be accepted. So there are many ways in which the cells that we will be manufacturing be used. All of them, of course, will be used by ourselves.
Got it. One last question. The DCR module prices, I think last time I checked, it was around 23 rupees a watt something. So is that the correct, or do you see any decline in price given that many more players are putting up facilities?
So what we can say right now is the prices are stable on the DCR front. We will see how it plays out, but our expectation it will remain something in that range.
Got it. All right. Thank you.
Thank you. The next question is from the line of Saurabh Doshi from ICICI Prudential Life Insurance. Please go ahead.
Hi, thank you for giving me the opportunity. So I have two questions. Firstly, would you be able to guide as to how much was the overall exports to the US for the full year? And secondly, on tariffs, what are the current tariffs that are applicable, and how does it overall impact your, profitability? As in, are you able to pass that on to your customers there, or how did that work?
So, in the revenue stack that we have at this point in time, anywhere between 17 to 20% is US bound directionally, and so as you can see, there's a very substantial 80% of our revenue coming from India market. So in that sense, we are in a position to manage our EBITDA in the right manner. The other aspect, Saurabh, that works for us is that we have a manufacturing facility in the US and, of course, a substantial manufacturing facility in India. And so based on how the tariff will ultimately settle into a rhythm, we will decide how much to be manufactured in the US and how much should be manufactured in India. And so we have a sort of a natural hedge or a natural moat which we can use to again control the primary control parameter which we have with which we are going to run the company, that is EBITDA.
Sure. Just a follow-up on that. So, and how do you expect the export percentage to be in the similar range for the next couple of years?
It would be directionally in the similar region.
Okay. And on the tariff, so currently, how much percentage is what is applicable, and does that get passed on to the customers, if at all, whatever is been exported?
So there are two things. One is, of course, as you know, there is a tariff pause. So we are looking what we can optimize in that. We will see how it plays out.
So at this point in time, it is 14%, right? And the flat rate that was going to be imposed on India was an additional 26%. That is what we know at this point in time, right? But we will need to see the evolution of all of this. And I'm sure all of us are going through the news. What I would do is I would emphasize once again on how are we going to deal with it, right? I think that's the more important component here. We are going to ensure that our EBITDA remains between 5,500 to 6,000. And the way we are going to do it is by using our leverage of having manufacturing facilities in both the countries. And that's how, we are going to, those are sort of the knobs that we control. And whichever way the tariff settles, we will be in a position to hold on to our EBITDA levels that we have given guidance for.
Sorry to interrupt. I would request Mr. Saurabh to please come back in the queue for further questions. The next question is from the line of Kuntal Shah from Oaklane Capital Management. Please go ahead.
Hi, thank you for taking my call, and good to see the presentation and the execution. My question is regarding the cell capacity. What is the current utilization and the efficiency, and what do you project it in next 2 years? And second would be on ENEL acquisition. How much is the total equity and the debt we planning to take on in IPP in next 2 years business?
So, Kansal, a great question. Modules, cells, whatever you take, and you have a nameplate capacity, and you have ultimately how much can you manufacture, right? Now, for modules, there is a natural sort of limitation on the top because of the type of the frame sizes that you have, the size of cells, all of that taken together, there is a natural limit to which you can reach to with respect to your nameplate capacity. As far as the cell capacity is concerned, it is not as limited. So as your facility ramps up, you can potentially get to a higher levels of utilization faster. So some of the lines that we have actually started 3-4 months ago are already at 90+% utilization. And the efficiency of the cells for mono PERC, we are getting already in the region of 23.5%. And for the TOPCon modules, where the lines have just started, we are already pushing 24%. So the cell capacity is actually ramping up very, very nicely. I'm just going to hand it over to Abhishek to talk a little bit about the NL question that you have.
Hi, Kuntalji. So on the NL acquisitions, we have informed that the transaction is under process and there are some customary approvals which are happening. But to give you a sense, we have committed, an equity value of around 792 odd crore of money. Plus, there are other small pricing mechanism which shall uncover by the time we close the transaction, which is expected probably within this quarter itself. As far as debt is concerned, a typical IPP generally gets a debt of 70-30, wherein around 65-70% is debt and 25-30% is equity. NL is no different from that from a structuring perspective. Hope that answers.
Mr. Kuntal, does that answer your question? We will move on to the next question. It's from the line of Bhaskar Chakraborty from Jefferies. Please go ahead.
Thank you very much for taking my question. Now, in your order book, it shows up that 57% is from overseas. Is it fair to assume that most of this is from US?
Yes, most of it is from the US. That's correct.
So we are also seeing close to 50 gigawatts of module inventory in the US, and it appears that the imports are down sharply. So would you be fairly confident on these volumes materializing over FY26?
Mr. Bhaskar, great question. So all of these, WAAREE has a philosophy of book and build. Now, let me take a few moments here to explain what do we mean by book and build. So we decide to build a factory only after we have confidence in the booking numbers. Once we book the orders and we know that we have to deliver, only then we go ahead and build the factories. And the factory that we have in the US, as well as the factories that we have, frankly, anywhere, including our Chikli, which is the largest facility, is built on the back of a very strong order book. And so the confidence that we have, and that's the reason why we have been able to give the guidance, right, for our EBITDA. It stems out of an order book which we are very, very confident about. Our customers are clearly needing all of these panels, and we are ensuring that we are able to deliver to them. In fact, the execution need inside our organization now is to, and since this IPL season going on, is to really consider almost every day as an over, and to make sure that we are actually hitting the manufacturing numbers every day to meet our customers' requirements.
That's very useful. Just one more thing. Given that this overseas order book typically has about 2 year cycle of execution, is it fair to assume that the overseas order book will become a much larger contributor to your overall revenue over FY26 and 27? Because if you are doing only 20% from the exports, then you will always have a very skewed order book towards overseas, and it will be further stretched out, right? Which is not the case.
So, I will tell you the velocity of orders for various different segments keep changing. So for exports, it's always, like you rightly said, Bhaskar, it's 2 years plus, 2 to 3 years. But typically for Indian orders, which is even for large institutional customers in India, it tends to be lower. So 1 year, 1.5 years, and plus there is almost quarter of our business which comes from retail segment, where the velocity is even higher. It's really book and ship. And so with all of this spread, just because my order book is 55-45, that doesn't mean that my sales profile is going to be 55-45. That will keep changing on the basis of customer requirements at that particular period of time. And so I would say, it could change, but it might not dramatically. Definitely in 26, it is not going to dramatically change. In 27 onwards as well, I'm not expecting like wild swings. This will be sort of the pattern that we will see for some time.
So what that implies is that 6 months out or 12 months out, the proportion of overseas in your overall order book will be much higher than what it is today, right?
Like I said, the proportion, both sides, on the order side as well as on the sales side, could remain similar. There could be variations, but they are not going to be major or wild variations. The way we are seeing the order book, laid out right now, and we are booked for the entire year. So 2026, we can actually see the future. We can see Q1, Q2, Q3, Q4, and we therefore know that it is still going to be in that same 17 to 22% for overseas. And again, supposing a particular quarter, we might have a situation where there are several customers demanding in the US are demanding, modules, and therefore you might have a variation. But on a yearly basis or on a long-term averages basis, you will find that range bound between 72 to 22% in that zone for sales for the through the years.
Great. Thanks. Last question is that.
I'm sorry to interrupt, Mr. Bhaskar. Please come back in the queue for further questions. The next question is from the line of Vishal Tanvi from Valley Quest. Please go ahead.
Hi, everyone. Firstly, congratulations on the numbers. My first question was on the revenue breakup. So can you give some breakup of how much revenue we are getting from retail business? Second question was on advance from customers. Can you give the number, how much was advance from the customers during this year? And if you can break that into US business and domestic business, it will help. Thank you.
Vishal, thank you very much for the question. Like I said, directionally, we have about 23 to 25% from our retail business. We also talked about the overall difference between, order split between overseas and India. But we do not normally get into the further details beyond that because they keep changing. They are dynamic.
Understood. And what about the advance from customers?
So
what will be that number?
So, Vishal, if you can just look at the contract liabilities on the balance sheet, that's indicative of the advance, that mostly the advance is there, sitting there, both in the current and the non-current section. So currently, roughly about, I can say around 4,300 or 400 crores is what we have as advances. Difficult to give you the breakup, but yeah, that's the broad number. And it sits in the head contract liabilities.
Understood. Thank you.
Thank you. The next question is from the line of Bala Subramaniam from Arihant Capital. Please go ahead.
Congratulations